Let's get started first with a global equity conversation. We have Drew Pettit, Director, U.S. Equity Strategy and ETF Analysis at Citi, joining in. Drew, always a pleasure having you on the show. Thanks so much for being with us. So we were just joking about it before you joined us now, right? There's the AI trade, and every other day it gets questioned and people pull some money out, but then they go running back towards AI stocks. So there's the AI trade, and then there is the anti-AI trade. And we here would like to believe that India is, probably one of the world's best anti-AI trades. So I don't know, tell us from your vantage point, what are you hearing around, and whether India is coming up more frequently in conversations, because we've underperformed. There was a local Morgan Stanley call that we just played out. The hope is that at some point foreign investors return. Do you see that happening?
So I hate to be the bearer of bad news in the morning, but India is a market that we took down from overweight to market weight in a global context. What we're actually looking for is not necessarily the anti-AI trade. It is the AI at a better price trade, which you're starting to see in China, what you're seeing in international markets, and honestly, still in some pockets of the United States. So while AI may be questioned, I would say a little bit more frequently as of late, it's still a trade that structurally we like. We just want to get it at a better value than you get in broader indices.
Oh, no, I'm so despondent. I think I need to just walk out now, take a break. No, just kidding, Drew. But, that's important. What you're saying is obviously really important, that I think the search is not for an anti-AI trade, but for an AI trade at a better price. But that also gives a sense that, are you in the camp that then therefore this is not really a bubble, because people are taking routine profits, looking at cheaper AI trades. So therefore, global equities is not at the risk of this AI bubble breaking or bursting.
Yeah, it's funny. We actually prefer the term boom over bubble. And to your point, it is the profit taking that's healthy that doesn't really scream bubble behavior to us. When we think broadly about even some of the leveraged ETF products in the United States, you're actually seeing outflows from those products on days the market goes up. And you're really only seeing inflows when the market goes down. So when you think of that in combination, people are taking profits when they can, and they're buying on pullbacks. That doesn't scream exuberance to us. That's actually relatively rational behavior, even if that is using leverage vehicles. So again, broadly, whether it's AI or the markets, we think we're in a productivity cycle, which is structurally bullish for equities, and behavior is still rational.
Drew, hi, morning. Prashant here. So 2000, there's 20 days left to 25. You think 26 will be a constructive year for global equities overall? Here in India, while the index has not done very well, there's a bull market going on in stocks. You just have to, and it's not as if, it's 1 in 100. You got so many digital platforms which are making their way into the market, listings, and they're doing so well. Even some of the old economy stuff. So there's a bull market in stocks, but not in indices, if I can put it that way. But 26 constructive for equities overall?
Yeah, the first half, our outlooks, look, we still have upside to our first half targets across the globe. And the key to the beginning of next year is kind of what you're talking about. Some of the cyclicals in the old economy stocks kicking back in. Everyone kind of confuses market leadership with breadth. And I think your question actually gets to this point very well. There are more things that are starting to work in the background. When we look in the United States, for example, everyone always wants to talk about the mega cap names, but there are a lot of stocks that are actually beating and raising, and that's how you beat the index. So again, to your point, there is more breadth, there's more things contributing, but the major drivers of global indices are still mega cap growth stocks. But yeah, I think 2026 sets up well because some of those cyclical stocks that really haven't done anything with earnings for 3 years are actually going to see earnings inflect higher next year. So that's supportive of, again, broader risk. Whether we think leadership change is a little bit of a different story.
All right, Drew, final couple of questions before we let you go. The last rate cut that we got from the Fed was viewed as a hawkish one. Now there are doubts whether or not we're going to get another rate cut in December. I think the odds have come down from 90% to around 50%, is looking at the Fed futures out there. What are you penciling in terms of Fed rate action? And what would make you change your stance in the Indian markets? As you said, you'll have put it down to market weight from overweight earlier. What's it? Valuation concern, is it?
So on the Fed, house view is we still expect to cut in December. How we're playing this through to our equity view, we do expect some cuts. We do expect a little bit of weakness in economic data, but not full out recessionary types of data. So again, those are more, I would call it maybe insurance cuts in a sense, or just kind of tweaking it in refining monetary policy. That again is good for broader action in equity markets. When it comes to India, really the story was earnings were good, fundamentals were good, valuations had kind of run away, not necessarily run away from us, but kind of reflected that good story. Right now, with more of the cyclical side of EM kicking in, and again, some of the AI tail in China as well working, that earnings growth premium isn't as strong as it was over the rest of EM, and the valuation kind of reflects the better earnings growth in India. So to us, it's kind of a combination of the two. We want to see premium earnings growth, but we don't necessarily want to see that fully reflected in valuations. So two-prong on your question there. It's keep giving me strong growth, but just give me a better entry point for the Indian market on a valuation basis.
We wish. They say, right, if wishes were horses and so on and so forth. But yeah, that's been the issue with India. Take your point completely. Valuations, maybe earnings will catch up and surprise on the upside. Thank you, Drew, so much for being with us. Great conversation as always. You have a good evening out there.